Lesson 1 of 28. If you don't understand Fed transmission, you don't understand crypto.
If you trade crypto without understanding the Fed, FED, the Federal Reserve, you're basically trading blind. The Federal Reserve is the U.S. central bank, and its job is the dual mandate: maximum employment and stable prices. In simple terms, the Fed tries to keep jobs strong while controlling inflation, and it explicitly targets 2% inflation over the long run using PCE, the Personal Consumption Expenditures Inflation Measure. Now, here's the key lesson for crypto. The Fed usually doesn't hit Bitcoin directly. It hits the pricing chain. First, the market reprices interest rate expectations. That moves U.S. Treasury yields, meaning government bond interest rates. Then, the U.S. dollar reacts, often measured by DXY, the U.S. dollar index. Then, overall liquidity and financial conditions tighten or loosen. That flips the market mood into risk on or risk off. And crypto, especially BTC, Bitcoin, often behaves like a high beta risk asset inside that regime. When conditions loosen and money becomes cheaper, investors take more risk on, and crypto demand can rise. When conditions tighten and money becomes expensive, investors protect capital, risk off, and crypto often feels the pressure, especially altcoins. To make this real, look at two historical snapshots. On March 15, 2020, during the COVID shock, the FOMC stands for the Federal Open Market Committee, cut the FFR, the Federal Funds Rate Target Range, down to 0% to 0.25%. That same day, Bitcoin closed around $5,392. The takeaway is not just the daily candle. In an easing regime, once panic fades, improving liquidity expectations can help fuel recoveries. Now contrast that with tightening. On June 15, 2022, the FFR target range was 1.50% to 1.75% during the aggressive hiking cycle. Bitcoin closed around $22,450, and the broader context was clearly risk-off, tight financial conditions, and deleveraging pressure. So here's your cheat code for every crypto move. Fed stance drives yields. Yields and the dollar shape liquidity. Liquidity drives risk on or risk off, and that risk regime pushes Bitcoin. If you want the next lesson, I'll show you exactly how to read a Fed decision day in real time, before the statement, during the press conference, and after the market reprices. Subscribe, turn on notifications, and comment Fed Playbook so I know you want part 2.